Over the past 2 years, I've only traded the NASDAQ chart, which has led to much heartache in the days and the years and the weeks. But in that time, there are a few things that I've learned that I want to share that have helped me become a profitable trader. My name is Aaron, and in this video, I'm going to share the 4 indicators to help you see the move before it happens. The first indicator, and probably most important indicator that I use, is structure. So structure is formations in the market that happen consistently each day. And so based on these structures, we can develop our trades, find entry points, find exits and stops on those. So there's 2 that I use. The first one is a cup and a handle. So here's the cup, and then we try to push back down to create a handle. Now, in this situation, you can see that it looks, I call this a W pattern because it does look like a W. And so there's a couple of things on here that I'm really looking for. So the market is at a point to where we break down. We then build liquidity in this area right here to then push back up. Now, once I start to see this moving up, that is when I look to take a potential play to the upside to the origination of the start of that cup and handle. Then you can see if we do get the actual handle on the structure, it'll pull down and then it'll actually push back up for a greater move. Now, one thing I want to note is typically we'll get a higher low. So this is a higher low compared to the previous low. Okay, so that is a cup and handle. We'll also get that same structure in an inverse cup and handle. So same structure, but in the opposite direction, something like that. So the higher area is up here. Then we create a lower high here, showing and signaling weakness in the market on this structure. So I also call this an M pattern because it looks like an M. So that is one structure. The other structure I use is the head and shoulders. So head and shoulders, we come up, we create a shoulder, then we move back up to create a head, to only come back down, create another right shoulder to then complete that structure. So this would be a head and shoulder structure. Now we can also get this same structure within the inverse way, right? So we can come down, push back down here, come back up, and then break the other way to create an inverse head and shoulder structure. So let me show you these really quick on the charts to give you kind of understanding maybe what this looks like. So right here is an example of a inverse cup and handle. So right here we have the cup, it's the inverse cup, we come down and then we break up to then push down. Now there are several indicators and things on this particular structure that I'm seeing that I can't talk through at the moment just because there's so much, but I do want to show that this structure does play out. It does show every day, and you can see here that we actually made a lower high on this particular play. The other one I want to show is the head and shoulders. Now, if I go back 2 days, you'll notice that there is a head and shoulders play that is playing out here. So market pushes down in the open. We then kind of find a base here, and then we start to create our head and shoulders. So you can see we create our shoulder here. So this is that left shoulder. We then move up, we create the head up here. Then we actually push back down into this liquidity area we were originally in on the left shoulder to create a right shoulder. And then at that point, I would be looking for some sort of play back down to around this area because that is actually the completion of the head and shoulders. So this is a head and shoulders. Again, you can get that same structure the opposite way to where we build down, we come back down even more, and then we kind of push back up to create an inverse head and shoulders. The second indicator I use are zones. So zones or liquidity areas on the charts are areas of price action to where they are resisting or finding support at certain levels. So let's kind of give an example of what this looks like. So a supply zone or an area where we're finding resistance, meaning we can't get above that area, would be something such as this. So you can see in this area, so if I use my pen to show you with the price action, I come up, I reject, right? We come all the way back down, I come up, right? I continually try to push through this supply zone or liquidity area, but I can't. So in that situation, this is where we'd be looking for some sort of short, thinking that there could be weakness at this area up here. Likewise, we could do the same thing with a demand zone. So a demand zone just means that we are finding support at a certain level. Now I know you could say, well, what about this big area here? But what I'm doing is I'm drawing it where I'm finding a lot of liquidity, right? So this is liquidity, right? You can see right here, I actually use it as support, or I'm sorry, resistance once I broke through. So let me do this. Let me go ahead and change this to demand. So this would be a demand area. So right here, we're finding demand, right? Meaning we're finding support. Right here, we're finding support, meaning that we actually push back up. But I want you to see this. So we break through this particular zone, then we actually try to bounce back up, but that demand zone actually becomes support. So it actually becomes support, and this becomes a supply zone after we've broken through that. So we try to come back up, we can't do it, and we find ourselves breaking back down. So supply zones can become demand zones, and demand zones can become supply zones. You have to watch the charts. You have to watch the price action to see what are we doing? Can we break through those areas? And if we do, can we use that, for example, in this situation, as resistance to then break down? The third indicator I use are candle highs and lows. And what do I mean by that? So every time a candle closes and opens, it does give us information about what that candle is doing and what the markets are doing at that time. So this is a really good example of us having a higher low right here. Then we have another higher low. So in this situation, I'm thinking, well, maybe we're trying to move up. But if I look around this area, what am I seeing going on? The highs and lows of these candles are up and down, right? Some are higher, some are lower, some are higher. There's no consistency here. And so what that's indicating to me is that this is an area of liquidity building, right? So we're building liquidity in this area for a greater move. Now, what I typically do when we have something nice, so let's kind of give this as an example right here. So I'm going to zoom in on this just to show you how this works, this concept. So I see that there's a bottom wick here, right? So this is kind of our low of this area. We move up, and then we get this next candle that pushes down and creates a higher low. Okay, so this is a higher low. We then get another candle right here. So to me, this is indicating up. Now, I want to kind of show you this because what we talked about earlier was structure, right? And so in this area, you can see that we are creating a cup structure, right? And so where would that actually end up if the cup played out in this situation? Probably to the origination area, so up into this area. So if I were to play this, knowing that we potentially could be strong in this, although I would be a little bit worried just because of all the liquidity that's here, so I wouldn't be totally out of the woods, but I can see that there is some strength that's building on this. So just using that structure to say, okay, well, we kind of know where we could go based on that structure play. Okay. We know that if we drew a zone, so we could do this, we could go here, we could take that next indicator that I use, right? So zones, we know that we have supply up here. Okay. And then on this bottom part, likewise, we know that, let's see, around here, I'll just call it here, we have demand. So those are our areas. I see that we broke below it, but it looks like we're actually breaking back up. So breaking back up here, I'm thinking, okay, well, if we're going to play this structure, this is a demand area, right? I'm getting higher lows, meaning strength, and I kind of know where we could finish or end up, right, on this play. So we could take our profits at this supply area. So that's kind of a really good example of what we're seeing with the candle breaks, so the high and lows of these candles. And again, I explain that more within additional videos. I'll go in more in depth, but I want to show you the confluence of the structure of the zones of these candles as a piece of this. Now, there's my last indicator, which is the fourth indicator, and that is my EMAs and my VWAP. And so I want to show you how this all comes together. So here it is. I know it probably looks like a lot of just lines and colors on the screen, but everything here actually makes sense and it means something. So right now you can see that this red line, or the pink line, which is my 9 EMA, the yellow is my 20 EMA. They're just intertwining, right? So there's no clear understanding of what we're doing right now. We're just building liquidity. There's no real move that's going on. People that are trading in these areas are probably losing money unless they have some sort of setup that they take off of those areas. But that's what I'm seeing with the EMAs. Now this green EMA is my 200. We did get below the 200, which does indicate some weakness. But I want you to see what's happening with the white dotted line. That is my VWAP. So the VWAP, we bounce. So we take that VWAP and we push off of that to the upside. So the combination of the structure that we're seeing potentially, right, with this move up, the move back into this supply zone, the higher lows that we're getting on the candles, and the fact that we're using the VWAP as support, all tells me that a high probability trade would be back up into that zone. So these are the 4 indicators I wanted to show you all at one time to make sense. Now, I don't want to make this video any longer, so I'm going to leave it at this. But these are the 4. If you want to learn more about these different indicators and how they work specifically with NQ, feel free to subscribe, like this video, and I hope to see you soon.